I think some of the biggest news last week was the two-day Fed meeting and the jobs report on Friday, which I'll get to those details in a little bit. Conventional rates as of today are at 6.9% and 6.2% for government loans for those with excellent credit. Consumer confidence rose in the month of January to the highest levels we've seen in a couple of years. The number of job openings rose in December and came in stronger than expectations. The Case-Shiller Home Price Index, which measures home appreciation, shows that home prices rose in November. Home prices have been on the rise since January and are now showing a 5.2% increase. We have actually seen a rise in home appreciation since about July of 2023. The FHFA also released their home price index, and this report also showed an increase in November. The apartment list also came out showing that there has been a decline in new rents. ADP came out with their report last week and said that 107,000 jobs were created, which is weaker than the 150,000 that they were expecting. Mortgage applications also fell by 11% and are down year over year about 20%. Now for the details of the Fed meeting on Wednesday, which also covers the press conference afterward. As we were expecting, there was no rate cut for the month of January. Mortgage interest rates did rise after comments made by the Fed chair. And this is what he said. He doesn't think that the committee will have enough confidence that inflation numbers are where they need to be to start cutting rates in March. That basically means that mortgage rates are going to stay the same for a little bit longer. We're not sure why he made these comments, because his former comments said that we would see rate cuts when we start to see inflation get under control. And like we reported last week, we're starting to see that in the PCE report that we got last Friday. The Fed has been shooting for a mark of 2%, and for the 6-month average, it has been below 2% at 1.89%. So if we're making this target, we don't know why rates will not be cut. Now we know these could just be comments, and they could change their mind at any time. So we will take these comments in stride. The initial jobless claims report came out and showed that people seeking unemployment for the first time rose by 9,000 to 224,000. And this has been rising for the past couple of weeks. This report also measures continuing claims for people looking to stay on unemployment benefits. And this rose 70,000 to 1.8 million. And the big jobs report that came out on Friday from the Bureau of Labor Statistics shows that 350,000 jobs were created in January, which almost doubled because they were only expecting 180,000. This report is completely opposite from the ADP report that showed more layoffs in a declining jobs market. I think the reason we saw this jump in numbers is the same reason that we saw this jump in December. The jobs report is getting weaker, but the unemployment rate is not changing because people are not being counted on unemployment. For example, if we look deeper into the job survey, we can see that 63,000 jobs were lost, but 96,000 jobs were gained, but those were part-time jobs, so not as robust as it looks. Coming up this week, we have the Senior Loan Officer Survey. This is a survey on bank lending practices, where they ask approximately 64 banks and 24 U.S. branches on what they're seeing as far as supply and demand to bank loans to businesses and households. On Wednesday, we'll get the number of new mortgage applications, and on Thursday, we'll get the number on initial jobless claims for the week. So not a whole lot of market movement this week. We'll see if we get any other news that affects the mortgage market, and we'll keep you posted on any changes. Help us by liking, sharing, and subscribing for housing market content. If you have any questions or would like to go more in depth about these topics, let me know. I'd be happy to cover them with you. Hope you all have a great day, and we'll see you next week.